So now I'm in this position. Key timing window as well. So let's see what happens. First things first, price moves away, and then price plays about a bit. And then we start to see price move away a bit more. Beautiful at this point, yeah? Okay, cool. What's happening, guys? So today I'm going to break down a day's worth of price action from a 1 minute perspective. So I'm calling this video 1 minute mastery. All right. So this is a day on EuroUSD where it actually ended up being a frustrating day for me. It was still a profitable day. I took a couple positions, but you're going to see exactly why it was frustrating, and you can see exactly what happened and why it happened. But you're going to get so much value from this video. So definitely tune in, get focused, get a drink, and make sure you stay until the very end. All right, because I've got something for you. All right, so you got EuroUSD on Wednesday, the 16th of July, earlier this week. And I'm going to start from the higher time frame perspective on the 1 hour, because even though, I'm going to show you from the 1 minute perspective, it's important to understand that the higher time frame still gives you the overall narrative. It still gives you your overall picture. All right. So just trading on the 1 minute or the 5 minute blindly is not something that I would advise. I would advise having a higher time frame picture still, because the higher time frame is king. All right. So let's get into this. So on the 1 hour time frame, what do we have? So what we have here, if I can go on the 4 hour, might be even better. But yes, what we have here is, let's look to the left first of all. So you can see we're clearly bullish at the moment. All right, we're rallying higher, and then what we have is over here the last, say, you could say accumulation phase, people might call it, but I just call that just a phase where before we expanded. You can see here we had this build up of highs, multiple highs, and then price moved it lower. And then it induced the lows, tapped into this imbalance or fair value gap down here, traded away, came back, used this as a trap, a smart money trap. You see there, this was taken out on the 4 hour. All right, so if someone wants to trade order blocks, anything like that, they'll be taken out here, just below, and then price went. All right, I can just show also it created like a trend line type vibe picture as well. So as price moved higher, what did it do? So on the 4 hour, what you can see here is straight away for me, you'll see this in a lot of my videos. I love channels, all right, and I spot these channels straight away. So this, as price built up here, as it played out this day, I knew what I was looking for. All right, so what you can see here is you got two channels, and you got a smart money trap as well. Two of the key traps that I look out for. So you've got this here. This was a channel higher. All right, this was a channel higher. Class that as a channel higher. Remember, we are bullish, so price rallied up, and what's it doing as it came down? Created a channel as well. All right. By the way, if you want to learn more about traps, make sure you check out the link in my description. You can join the Market Mastery Club, my brand new premium community. All right. So as price done that, so it built up channel to the bullish side, and it's built up a channel to the bearish side, creating liquidity above here. So you've got plenty of liquidity above here to attack. So first though, I looked at this and I looked at that as a smart money trap. I never expect these kind of lows, or order blocks, some people might call them, to hold. So this for me was my target. I wanted to see this run low. So as we approach the day, hopefully you can start to see what I was seeing already. I've got liquidity to attack up here. I've got my smart money trap that I'm looking to be taken. And then on the day itself, so that's the high time frame picture on the 1 hour. All right, high time frame. I'm thinking price may go higher, but before it goes higher, what does it have to do? Excuse me. Before price goes higher, what does it have to do? What do I always say? For price to go higher, it must first induce lower. Or for price to go lower, it must first induce higher. Okay, so what you can see here is, yes, this is a beautiful move lower. Some people might think that this is the inducement lower. It's the start of it, but it's not quite the end of it. Price tapped into the smart money trap, giving it a reaction. Okay, so let's get onto the daily price action that I was looking at. All right, so I'm gonna move this out of the way for a second. You can see here, we tapped into the high time frame smart money trap, and now we're trading away from it with very choppy-ish price action. All right, let's go on to the 1 minute time frame. I'm gonna break this down now. to the nitty gritty that I wanted to talk about. So when I'm looking at this now, I know that I want price to take out this smart money trap to the left on the hard time frame, right? So I want price to go lower. But what do I always say? For price to go lower, price must first induce higher. Okay, so I'm looking at this, I'm like, okay, so where do I want price to go, or what point do I want price to induce before it goes lower? A couple of things to spot here. So first things first, I see this imbalance zone right here. All right, I see this imbalance zone right here, and I see this high just below it. All right, so straight away, I'm interested in that area. Okay, so the imbalance itself is kind of, I don't need it to be filled, but I want the high below it to be taken out. All right, so I'll go down to the 1 minute time frame now, and I also look to the left, and I see this as I see that as a build-up channel. All right, and then again, also I see all of this also as a build-up as well. Now, it's been a bit of a slight trend line type vibe, but a build-up as well. All right, but although I see this to the left as a channel, I don't expect that to be taken out straight away, because I know that I expect a reaction once the smart money trap below has been taken out. So I'm seeing this as my key liquidity. I'm seeing this now as a build up. Does it get any cleaner than that? When I've got my high time frame picture, high time frame narrative, and I've got my intraday narrative. So let's go on to the 1 minute time frame. So now it's 7 a.m. I'm not quite on the charts at this point. If I press play, typically I want to get into positions during London. So here's where it gets interesting. So what do we see here? First things first, you can see now here around, what time was this? 6:41 a.m. for me. You know, price gives us a nice clean build up here, inducement, trades away. Again, within here, you got a slight minor inducement. Then you've got build-ups in here. Inducement of that build-up, then you've got a mitigation of that inducement. All right, so this is just painting me a picture now. So now I see this, and with my narrative, and I'm now seeing this as eventually being a trap. Okay, so let's see what happens. So this is where I got interested, because we're now approaching 8 a.m. 8 a.m. Okay, and 8 a.m. is where I like to get involved in the market. London open. I like London open. All right, so probably one of my key trading windows. So if I press play, if we fast forward, you see what starts to happen here. Okay, cool. So I'm going to the 30-second chart for a second though, guys. All right, because I knew that on the 1 minute, my break of structure point isn't really until this trap down here. That's too far for me. I do like the 30-second as well. So once I saw price give us my nice, beautiful inducement, took out my structural liquidity point. You can see here, my key liquidity point, this high into this imbalance. Gone to the 30-second. I saw this relative break of structure. Once price came back up, I took a position. It was about a 2 pip stop loss. So it might have been a bit higher. Or 2.5 pip stop loss. I can't remember. You will see a screenshot on the screen of my actual position. But it was about between 2 and 2.5 pip stop loss. All right. Looking at this on the 30-second, it's quite clear to see. Yes, price could come up here and take out this high internally. If the trade is valid, tap into that imbalance and then go. I wasn't so sure. As price came up, you can see here it does exactly that. As price came up, I took it a bit earlier. I could have taken it up here and drastically reduced my stop loss to just, maybe a pip and a half, or definitely 2 pips. I think it was probably about 2.5 pip stop loss that I had on my actual position. So let's call it 2.5 pip stop loss. If we put it there, for argument's sake, let's just say I done this 2.5 pip stop loss. All right. So I'm in this position now because I've had I've got my build up down here. I've got my my trap. I've got my key liquidity that I want to be taken. I've got my entry model now giving me sorry, my entry model active because it's giving me the inducement and then the relative breaker structure. So now I'm in this position. Key timing window as well. So let's see what happens. First things first, price moves away. And then price plays about a bit. And then we start to see price move away a bit more. Beautiful at this point, yeah? Okay, cool. So now I'm like, beautiful. I'm in the money. Price is doing exactly what I wanted it to do. All right? But this is when it gets interesting, guys. When it gets interesting. And then you can see here also, it smashes straight through the trap. Straight through the trap, going bearish. So if I press play. Right, cool. So what do we have here? So I'm now in this position. I'll leave that there. I'll leave it really thin so that it's not doesn't get in our way. But I want to go up to 1 minute for a second now. All right, and then I want to also go on to show you on the 30-second again. To most, this wouldn't be obvious. This wouldn't be clear, but to me, I saw this. That's the wrong tool. This is actually my channel, another channel. Price came down. Took out a structural low, second structural low here, a couple structural lows. All right, then price turn. Give us a break of structure. And the 30-second, you could argue it's this one here, but to be safe, you probably say this one here. It's not a trade that I'll take, by the way. I'm just telling you, I like to go through the price actually so you can see what took place. The initial inducement mitigations down here. And then price, order flow mitigation here. Price moves away. Cool, so this is what I'm seeing at this moment in time. If I'm being brutally honest, so out here, I'm up 5R. I'm up 5R. And let's just be real here. We can discuss all different strategies and things like that, right? A lot of successful traders are successful repeatedly catching 2R trades. You know the way that I trade. I like high risk to reward. 5R typically the 4 to 5R is my minimum that I usually catch. I wasn't monitoring this trade as I would. I thought, cool, I'm in my entry. I thought it was gonna fly down. Just being transparent, I thought it was gonna fly down. Take out the trap, 14R trade, full volume, boom, done. Great day. That's what I thought was gonna happen. It didn't quite work out that way. And I'm gonna show you why. So, I'm not gonna show you why, I'm gonna teach as I show you, okay? So, as price came down, took out the structural liquidity to the left, give us a nice entry model to trade back up. Again, this is counter trend. This is a pullback. I wouldn't take this trade personally because my actual bias is bearish. And this would be risky. But what we can see here is a nice imbalance. Okay? So because we've got that nice imbalance, what did price want to do? Price came back up. So what does it do first of all? Look what it does. Creates equal highs. Gives a false reaction. Comes back down. Mitigates this. And then keeps going. All right? So let me press play. Let me show you guys what happens here. Cool. It comes up. But guess what? All right. My entry must have been a bit lower. My entry must have been, unless it came higher than that. Let's see what happens. Can't make the exact candles, but let's see what happens. Price comes up. There we go. Okay, that's why. There we go. Price comes up, and then it takes me out at break even. I laugh now. I wasn't laughing at the time. I was not laughing at the time. Upon reflection, this is very silly for me. Upon reflection, because I knew this imbalance was here. I should have been monitoring the trade better. Because if I saw this happening, I should have taken partials when I saw this channel build up and this price action. I should have taken partials at 4R or 5R. And then I should have opened up my SL to at least these highs here rather than break even. All right, I didn't. So price then creates another build up this is also creating another build up, by the way, as price is trading away from this low. It's creating another build up. It's gone higher, taking out this key liquidity again to the left, mitigating here for order flow as order flow. All right, and then it takes me out at break even. But once I see this trade away like this, I'm like, you know, I'm not missing this trade. I've got my bias, and this is why I always say also direction is more important than anything else. Direction is more important than entry. You can go for the beautiful, nice entry. This is a pretty nice entry, 2.5 stop loss, right? It would have been a 14-hour trade on the day. It took me out, is what it is. I could have had a better entry, of course, but that's still a nice entry. However, I was taking out a break even. So once I saw this price trade away, I was like, yep, it's going to be a bit of more of a stop loss. I think it was about 4 pip stop loss. I'll put a screenshot on the screen so you can see my entry. And then let's see what happens after that. Price then trades away a bit. And then what does price do here? It comes down, gives us another false reaction at these lows. Comes down. Then goes high, then comes down. And then, cool, what happens here? This is interesting here again, because you could say the same thing was going to happen again. Because, what do we have again? We've got a nice high here. We've got an imbalance in here. All right, we've got a build up here. Again, you can class this as another channel type build up as well. All right, so you could say price could come up here. It could even take out this high and then drop. And then again, take me out of break even back here. At this point, guys, I was break even. I was like, if it comes up here, then I'm just wrong. And price is probably going to just keep going higher. So I'm not going to just keep risking, you know, keep going to the same positions. But what price has done here is come down, taking out the structural low, giving us an inducement. And the inducement that was then mitigated here. You can see it. Beautiful. Price has gone higher. Let's play it out. Cool. So what has price done as well? It's created equal highs here. But before it's done that, build up. Channel. Inducement of the structural point. Actually wanting this structural point. The inducement was then mitigated. Again, it's not a trade that I would necessarily take, but I'm just explaining the price action to you. And then we start moving. All right. So, and where we go into, we're going to these lows. All right. But there was a new, I'm not sure it was PPI or CPI. There was news that came out about 1:30. You can see, boom. Yeah, you see this reaction here. Comes down, gives a reaction. What does it do? All it does is takes out this structural point. But what do we have, guys? Channel. Right? Boom. Takes that out, goes lower. Let's speed this up now. M5, boom. Target hit. Target met. And then we get the response, right? You see how important it is to understand the targets? I was expecting the smart money trap to be taken out. And it was. And then we had the aggressive move, which I didn't catch the buy, but I did catch this sell. I missed my beautiful sell, which would have been really nice because I was taking out a break even. However, I was still able to catch this sell, right, with this position here. So, guys, hope you enjoyed that. If you want to learn more, don't forget you can join the Market Mastery Club. Currently, I've got the founders rate going, so the first certain amount of members will get 25% off of their membership for life. So now's the time to join if you want to join. All right. Hopefully you enjoyed that one, and I'll catch you soon.